Morning, Britain.
Good morning, good morning, good morning. How are we all? How are you getting on today?
It's the 3rd of June. We've got a wonderful show coming up and no music. Oh, there is a bit of music.
Are we starting to taper it off yet?
We're turning the volume right down. My sister, I got an angry text yesterday. Tell Phil to turn the music off. Right, so what's coming up on today's show? So we're not hurting you all with that music. Let's go.
Where are we? So I'm going to be in here till about 8:30. So we're going to hit the opening bell. We're going to hit fast markets. And then Matt Arba is in with Ange for 8:35 for live from the trade desk.
And then after that, coming up on the 9 o'clock hour, we've got the All Sessions Open. A little bit of a quiet one this morning, not too much to watch for. Dylan's back after Angeline leading him astray last week. The two are reunited at 9:10 this morning. And then, God, 9:35. What about that for a lineup?
Yeah. Blimey, the voice was about to break then. We've got the whole Smart Portfolio team in. You know, two of the IG fund managers that manage our long-term investment products, both Aaron Bright and Martin Harris, are going to be here from 9:35 seeing you through to the show.
And we thought we would do that. If you're having trouble sleeping tonight, you can watch a replay of it and they'll talk you into sleep.
Where's the sound effect?
That's going to go down well, isn't it? Oh, Martin Harris is going to be, hey, my friend.
Well, we'll soon find out if he's listening.
Yeah, that's true. It's a little test.
One way to see if he's actually watching us. We'll see him pop up on the chat in a minute going, you guys.
Now, talking about who is watching, well, Andrew McKelvey is. Thames Water, indeed, in the brown stuff. KKR pulling out
of the deal.
Uh-oh.
I'm going to give you a water story here for some very boring start to the day. My water this morning, the pressure's completely gone. Thames Water with me. I'm sitting there in the shower and it's dribbling. I'm going, oh no. I'm thinking, oh no. I'm sitting there looking at my watch going, how quickly can I get to the gym to have a shower?
Yeah.
Because after this, I'm off to see some clients. I'm just thinking, oh no. And then all of a sudden, it came through perfectly.
Nice.
But geez, it was close shave.
I've had a few recently where you turn it on and it just like nothing comes out.
Yeah.
And then, 20 seconds later, boom.
Yeah. I turned on the tap in the sink. I was like, this is kind of better pressure than the shower. Is it going to work? I showered. It's all good. Thames Water didn't get bid for.
Mate, I've just taken the mick out of Aaron and Martin for being boring, and you come up with a water story.
It was important to me this morning. I'm sitting there going, oh, come on.
Right, DAWI Spiders is back. Long time no see. Welcome back to the show. Monkey Man's Taco Tuesday. We've got Julian in. Parquet 1977. Yeah, I made the same mistake as you. I didn't think any music there either. R6 Senna in the house. Good morning to you. Have you signed up for June the 20th? Are we going to be seeing you all there when Sosnoff and Batista? Now, it sounds like... I don't know if I'm allowed to say this.
What, you're not going to buy the beers?
Oh, I am buying the beers.
100%
and the
you're
wine.
buying the beers. Yeah, you've been saying it for long enough. You've got to hold into account.
Because you've got to have a vino with the boys.
Yeah, that's a shocker. It really is a shocker.
But there are rumours that Sosnoff is going to be sitting here on the Friday morning. So if you can't make it along, if you're at a different part of the country, if you're up north, or even joining us from abroad, Sosnoff is going to be sitting in that chair on Friday the 20th of June. Nice. I'm going to have to fight back for this chair, I think.
So are you going to have a takeover?
Well, actually, there you go. So producer Phil, or the foreman as we like to call him now, your job by the 20th of June is to work out how we can get 3 people at a desk.
Well, we do it for talking shop. But there's enough cameras. There is a camera here. There's a camera here. We've got it. It's fine. Easy. No problem. Phil, you sorted it out. No problem. Full trust.
Right. Who fancies a bit of overnight action then?
Let's go. Welcome to overnight action. Sorry, you were about to say that then, weren't you? You kind of went...
No, so you and Ange do the welcome bit, but I don't really do a welcome when it's... I forget.
Okay. Welcome to overnight action.
Do it properly this time.
Okay, should we start again? Welcome to Overnight Action on Tuesday, the 3rd of June.
It's almost like you're finishing my sentence.
Oh, it's so cute, isn't it? What do we have tonight? Most headlines this morning. It's been a fairly decent handover from the US session. APAC was okay, but then sentiment slumped on those China PMI datas. You see those?
Yeah, soggy. With a 48.4?
48.3 I saw
course.
versus a 50.4 in April, which makes it the weakest PMI, so the Purchasing Manufacturers Index, obviously important because of everything going on with the tariffs. But this is it's the first contraction in 8 months. So are the tariffs starting to hit the exporters? Well, the data's starting to suggest that it would do. So
especially because we had everything, front running, and getting everything out before the tariffs, and then it's natural. So are we going to see the same through the rest of the world? I think it was Sweden that was saying we'd definitely start to see some effect of the tariffs on on the economy.
Yeah.
So having a look at the chart of yesterday's S&P 500, had a decent intraday rally there. You see it, we bottomed pretty much on 3 o'clock as the ISM came out. And yeah, ISM in the US was actually
okay.
Yeah,
it was okay. It was enough to turn around. I mean, it was a fairly negative kind of European session, another soggy session at the start of the day, and then the Yanks came in and just
they'll buy anything, won't they?
Balled it up, yeah. And you ended up kind of reading all the market reports at the end of the day, saying positive, pretty positive. Gold came off, the dollar came off, dollar strengthened a little bit, so which is what kind of gave that gold a little bid. Did we get above?
You can see
six?
We closed on the highs, right? That's your 9 p.m. and then that's all the derivatives traders panicking up and hedging their delta, and then we've seen a one-way traffic since then.
I saw an interesting kind of tweet yesterday that looks at the S&P, and they were specifically making reference to SPY, and they noted that SPY's been bullish during the main session, and then getting sold overnight, which has been the wrong way around, really, because previously you could buy the close, sell the open. It was a kind of fairly famous strategy.
Yeah.
You could do that because you're going to get all the overnight news, you're going to get the pre-market kind of earnings. Typically these things, go up, earnings revisions tend to get lowered, so therefore everybody beats, the stock price goes up, and so you could buy the close, sell the open. Not so much anymore. So you've been seeing these kind of international investors, they claim, that have been benefiting from the kind of lift in SPY all the way through the day, start to fade it at the end of the day, which is interesting.
Long may it continue.
Or my thought was, you're just seeing this move towards the zero DTE market from the speculator's perspective, and they have no ability to trade outside of hours.
Yeah.
And so you're seeing more vol during the main market session as these products.
That's even better, because then they threw it up in the air and you managed to smash it down as I did at paddle yesterday.
Happy days.
Oh, I was on fire.
Yeah.
I've learned to go into near the net now when when my partner's serving. So my partner serves and I'm up there.
Like Dowie spiders.
You wouldn't even seen that on screen. I'm so quick. It would just have been a flash. Morning, Moscow Rob to you. Moscow Rob, I don't remember seeing your name up there before. Let us know. Give us a little introduction to yourself, to all our friends. Shall we have a quick look? Well, actually, one thing just on that, the CTA. So, we know these commodity trading algorithms are the bane of my life. Been around, I've been fighting them for about 11 years now. And instead of just jumping on and going the same way. So in April, this is really nice to read. In April, the sentiment was dire. CTAs flipped 100% net short.
Right.
Then, as the market recovered, they had to reverse engines. They had to buy back all that short, and they went long by $17.5 billion.
Well, yeah, I mean, that doesn't surprise me. I saw that US funds bought US stocks last week at the fastest rate in over 8 months.
Yeah.
So they were just like, we need to back up the truck now because we're lagging. We're literally lagging, so you have to buy, you have to YOLO in. Yeah. And the problem is you're going to be chasing the market at that point. And now look at where we are.
Well, that's exactly what's happened, right?
Driven it all the way back to the top.
So actually, now...
I just had a thought. Sorry, Moscow Rob, I think you're Rob that I'm seeing later today. Hence the cricket bat. Be seeing you shortly.
Should he subscribe to the channel then?
You've got to like and subscribe, surely. Come on, Rob, give us a like and subscribe.
Give us a quick like, and I'll tell you all what the CTAs are going to do next.
Dun, dun, dun.
Who cares what they've done in the past? We want to know what happens next.
Can we front run the laggards?
So, in a flat tape, basically in every situation, CTAs are now sellers, right? In a flat tape, they've got 2 billion to sell. Not much, because remember, they're long 17.5. In an up tape, they can sell 2.5 billion. But in a down tape over the next week, they're sellers of all 17 billion. They go back to flat if the market starts to come off. Over 1 month, it's pretty much the same numbers in a flat tape. They stay as they are. In an up tape, they buy 5 billion. But in a down tape, if the market comes off below 5,650, they have to sell $123 billion. So they sell their 17 long and they go net short again.
So they're the ultimate momentum traders.
Yes. They're Axel on roids.
Yeah, they are. If it goes through a level, you have to push it through the level. Either way.
Yeah, whichever way it's going, then they exacerbate it. And it's their fault. We had those excess sell-off in April 13th.
And from my understanding then, so what drives that positioning? So why do they have to sell more if the market breaks 59?
For that precise reason, all there are is momentum junkies.
And so they get stuff that gets, kind of these algos get things pushed through them, and therefore they think that if it breaks lower, we're going to push it even further, or we want to sell in to kind of follow that momentum lower.
Exactly, and they know the investor psychology. They do a lot of testing, so that's why you see quite a lot of volatility in that first 10 minutes of the market in the US. So it will spike one way, and it will test to see how many buyers there are, and then it will spike the other way and see how many sellers there are.
But they can't all be running the same algo.
Pretty much, it's you know, there's different coding, but they're all in the same theme. If the market goes down, it's going to go down more.
Interesting. Cool.
Technical analysis.
So what levels are we looking at, just to kind of summarize?
Yeah, so the exact levels are on the 1 month tape. This is from Goldman's. So in the short term, the pivot is at 5,650. So they go from long to short. The medium term, 5,783. So because they're long, the momentum has to keep on
Pushing through.
going. So if it starts to fade, 5,783 is that pivot. And the long-term pivot is 5,538.
400 points lower than where we are now.
Yep. Over the long
And how
term.
often do they update these figures?
Oh, it's daily.
Daily.
Yeah.
Okay. Interesting. Interesting to note. The other thing that's probably worth having a quick look at, just on the economic calendar today, is the European inflation data that's due out.
Do we have an economic calendar, team?
No, we don't. In that case, then, jump onto my screen, please. Are we going to pop onto the screen?
See, this is what happens. Producer Phil's off again, isn't he? So they're just having a little chat amongst themselves, and then they.
Okay. Right. Well, we have at 10 a.m. probably the most important data point of the day. Well, there's two important data points today.
They can put mine up. There we go.
We've got the. Can we?
European inflation.
European inflation at 10 a.m. We're expecting.
Guys, are you putting the screen up, please?
Look at this. Professional show. There we go.
Yeah.
There we go. European inflation due out at 10 a.m. Forecast is for 2%, which is a decrease from previous at 2.2. That's getting dangerously close to everybody's mythical 2% inflation.
To the target, yeah.
Yeah, bang on target. So you've got a rate decision later this week, I believe, and it's all but nailed on that there's going to be a cut. So that's going to be really, really interesting. You'd imagine if you get a weaker inflation, more dovish, cuts, weaker euro.
Yeah, do we see it drop under 2%? That, probably not.
I'm not sure we do.
But the core is still 2.5, isn't it? And that's expected to then turn up again. later in the year. So,
where are we on the euro dollar this morning? Let's have a quick look.
and then this afternoon, JOLTS. Yes, there they are. It's the start of the big 4 data points of the jobs market this week. So 7.1 million. Remember, that's the figure that nobody ever looked at until about a year ago, and then it became one of the most important in the market.
Yeah. Well, you've got to, if this economy is booming, as Trump tweeted last night, or he truthed last night, they're going to be creating jobs. How many jobs are open? It's not creation, this is, don't forget. This is how many jobs are open. So they haven't filled them yet, but they're available. And if there are more jobs available, it means that there's slack in the market.
The producers are now having a public argument. The producer and the directors on the chat. Oh, this is brilliant. The last thing you said to me was, I did not make an economic calendar because you didn't use it yesterday.
Well, there wasn't anything going on yesterday.
Yeah. Andrew McKelvey saying we need to bring them bacon butty in the morning to keep them
going.
Yeah.
What does that happen
like
from
putting the money in the meter?
Yeah, but does that happen to the presenters and the talent? Do we sit here? Do we get them as well?
Talent. I think that was taking it a bit far, isn't it?
Yeah, we don't. There's no makeup. There's no nothing.
There's what you talking about. There's no makeup. I'll see your makeup down there.
What? Oh no, that's got to be Angie's, right?
There it is. Oh, mate, you've got yourself into mess there because that's going to be screenshotted with you holding up your makeup bag.
Shall we look at UK stocks?
I would love to.
Yeah. Biggest one today, British American Tobacco. So if you want to pop my screen up here.
Oh yeah, shall we have a look at Luke Moore's screen? There we go.
Yeah, so here we go. So the biggest story today, they have come out and they've said that their first half revenue is slightly ahead of expectation, this first line here, and they're going to return to revenue and profit growth in the second half of this year, and that is good. You've seen the stock bounce pretty strongly over the last year or so. And so that's positive there. They are talking all about this Velo Plus, the snooze product that they run that you see so many
Ronnie
people
stuff
with today. Yeah, the Ronnie's bits and pieces. So they are fairly good, I think. Have we got any early calls on them just yet?
Up 1%.
Up 1%.
So performance slightly ahead of guidance. We've also got EasyJet up 0.5% this morning, raised to outperform at the Royal Bank of Canada.
Yep.
And Glaxo downgraded to hold at Berenberg with a £16 target. We've got IAG cut to hold at Goodbodies. They're obviously fans of Ryanair more.
Clearly.
And then Vodafone's named their CEO of international markets.
Babcock in there as well?
So Babcock, what are they? I haven't got that one.
Babcock's not been given a rating necessarily, but they've been tipped in the Times as a hold on their Tempus forum. They've said that they're going to be a clear beneficiary of the defence dividend that we've been talking about in the UK over the past couple of days. But the share price looks toppy, so they don't want to allocate towards more, but they think hold on to what you've got. There you go.
Should you invest in Babcock right now?
No doubt this company is a major beneficiary of the defence dividend, but they think it looks a little bit toppy. So there's a story for you there. The other one, Chemring. Chemring are out. Their first half revenue. In fact, let me see if I can get them up on here as well.
It must be fun because they're looking a wild unchanged.
A wild unchanged, and that text on the platform looks absolutely disgusting. So I will read it to you instead. Their first half revenue beats the estimates, 234 million versus a 229 expected. Their adjusted operating profit came in at 27, which is a slight beat at 26.8. And they've said, quote, with growing geopolitical uncertainty resulting in an increased defence expenditure, particularly across NATO, the group is well positioned with a strong and sustainable platform to increase revenue by 1 billion by 2030. So I'm surprised they're unched. That sounds pretty good to me.
Yeah. Right, we've also got Wing It saying good morning to everybody. Can you wing it?
Yes, you can.
Can you wing it?
Yes, you can. Can you wing it?
Yes, you can. Come on, everybody. It's 7:50 on this wonderful Tuesday. It's beautiful sunny outside. We have a very exciting market in front of us. What is going to happen with our friend President Trump now putting down the ultimatum that all parties must come tomorrow with their final price?
Yeah, I mean,
What's your final price?
if you were, I don't know, who's not done a deal? India. If you were India with a booming economy yourself, would you not just tell them to stuff it? You know, if you're saying we've got to get done by Wednesday, give us your offer by Wednesday, and you've got, you know, you've been talking about this over the last 3-4 weeks, 2 months is basically where we are now, and you say no, you know, Wednesday, it just adds a risk to the market. I don't think it necessarily brings you forward, because let's say
What's driven it though? Clearly, there's a lot of people that are just being very slow to come to the party. It's like lawyers, right? Court cases go on for 2 years, 4 years, 10 years. The Greek European crisis, right? Oh, let's have a talk. And no, it comes up to brinksmanship, and then suddenly everybody gets in a room and gets things sorted out. So I do have a little bit of sympathy for him saying, look, stop faffing around and get some numbers to us.
yeah, but I don't think you get international deals done that quickly. You know, nothing with any substance.
Just a framework, isn't it?
Yeah,
It's
but
not
it'd be
like-
nothing with any substance. You know, Boeing will get another couple of jets ordered, because that seems to be the tool and the modus operandi. You know, the amount of support that business is getting is obscene for a company that then he's backed around and said that you're not funding our Air Force Ones anymore because you're too slow. Bizarre. But yeah, okay, we've
Boeing's
got
up to
Wednesday.
211. Okay, so it's working.
Well, yeah, of course it is. If you've got the government forcing orders down your throat, of course it's gonna help.
Jeez, I had not seen that Boeing had gone on such. Wow, that's good.
Least surprising chart of all time. You've got the.
Hey, are you long?
No, annoyingly. I'm not.
Why is that the least surprising of all time
Yeah,
then?
but you've got, you know, the government is basically parading you around.
Do you still
with
buy
you
it
as
here?
opposed to child.
It looks like a breakout, doesn't it?
It does look like a bit of a breakout to me, yeah.
Wow.
Zoom out a little
I had
bit.
missed that.
Zoom out, where are we coming back to?
Steve Davies, we are going to cover Robinhood in about 15 minutes time on our fast markets. And we'll also have a look at Sliver as well.
We can have a look at silver. What else do we need to cover? Kia Group, they just came out. We didn't get through to them. They're trading well in line with expectations. Profit margin has been up to 4 to 5%, which is positive. Pennon Group, another UK stock, their adjusted EBITDA missed estimates. Results in line with the management expectations, however. They're clearly a bit dour over there, but they anticipate a return to profitability next year.
Talking about dour, we've got Darth Buddha joining us from New York.
Nice.
What's that? 2-3 o'clock in the morning? Very good evening.
And we've got a weather
Right.
report going on.
And we've got a weather report from the rest of the world. Do your little weatherman?
My little weatherman.
Yeah. So up in...
Plenty of wet stuff in South Wales, and then up north it's also wet, and I think we're expecting to get it mid-morning. So I did bring my umbrella.
85% chance of rain today. Right, it's 7:53, which means it's time for Guess That Chart. Now, producer Phil has promised us it's going to be harder today
We've got a new game,
than
haven't
it
we?
was yesterday. We do.
Okay.
You haven't been part of this.
No, is there a new game?
There's a new game, and I don't know the answer.
I don't know the answer.
All you can do is check the obviously timeline on the bottom and the prices on the side, and you got to guess what the chart is. I'd laugh if it was now Boeing.
Doing this 6 minutes before the open.
Yeah.
Let's do it.
Well, it's the break.
They
want
Tasty
Yeah.
Life's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
We are back for the opening bell this morning on the 3rd of June, and Rich is feeling
Oh, I'm so smug right now.
so chuffed because he thinks he's got it, because he thinks he's been long of it. Outrageous. There's been some collusion here. I don't like this. Don't like this one bit.
Oh, I'm telling you. As I have been long of this, and I was speaking about it probably 5 months ago.
So I can deduce what I deduced. It moved in early March, what I would only imagine is on its numbers.
Yeah.
It didn't move.
Get the chart up again, please, guys, if you
Didn't
can.
move on tariff day. That was the important thing. So it's uncorrelated to tariffs.
Yeah.
And I'm trying to figure out whether this is 20p or $20.
So it's had a warning in early March, right? It's dropped from 21 quid down to 18 pounds. I can reveal it is GB pounds.
Okay.
And then it's sold off. It's bottomed at 17 pounds. It hasn't been affected by tariffs, and recently it's had a good set of numbers about a month ago. Come on, team. A British stock. It's not in the FTSE 100.
Not in the FTSE 100. So it's not. It can't be next because it's too cheap.
It's not next. What stock is £20? Yeah, Steve Davies. He's nailed it.
Good work, Greg.
It is the mighty Greg.
It is the mighty GR eggs with their sausage rolls that you can keep in
GR
your
eggs. Very good. Right. Okay, so we've spoken about the ultimatum. We have gone through the futures, the Caixin manufacturing PMI coming in light. We've got JOLTS later on today, and we've got European inflation data today.
Yep.
We've also, Adam Jonas had a piece out on Tesla last night. Nick Feingold sent me that across.
Interesting. Another update to the applied embedded AI story.
Yeah, so it's
about.
a 410 target. Is that new?
I can look that up in a minute.
Yeah, and a special word today before this market open. Nick Feingold, happy 60th birthday. That's it. The Fat Gladiator himself. His 60th birthday is today. So sending you all our best from here. Your favourite TV show, Trade Live IG. Have a fantastic, there's a big party planned.
Yeah.
Oh my goodness, there's a big party.
Happy birthday to you, Nick.
Right, on that, let's get ready for the opening of London Stock Exchange on Tuesday, the 3rd of June. As Luke Moore in a proper ring.
And we are open.
So it's going to be a bit of a slow opening by the looks this morning. So I've never seen a group chat kick off like the Feingold chat. There's about 40 people going happy birthday all at once.
Because of the mention? No, lovely.
So, yeah, it's a bit of a slow opening there. We got, Tesco. Why is Tesco up 1.6%? Is that an upgrade?
I will have a little look.
That must be an upgrade. Prudential up 1.
Got a nice spike in the FTSE, actually.
Reckitt Benckiser are up 88 basis points as well. Yeah, strong opening for some of those names. Not Glencore, though. Glencore down 1.3%. Copper giving back some of its gains from yesterday.
I wonder if there's been any of the... is Sainsbury's moving or any of the other...
Yeah,
I wonder if there's
not nearly as much, though, 60 basis points.
Because we sometimes get the Kantar data, don't we, each month, just on the volumes. So I will see if I can find that. But it seems to.
Defense names going higher again. Rolls-Royce 873. Oh, it's well outshone us on the side of our subscribers. We're still playing catch up there. Scottish Mortgage Investment Trust is our new 2-week target. So we have to get up to 985 subscribers.
Yeah, like that. Because
that's
the Luke Moore pension trade.
Yes, we're chasing your pension.
Chasing my pension higher.
And then British Aerospace up 1.25%. Do you still buy them here? We had Keir Starmer yesterday saying we must make the country battle ready.
You just have to do the hand thing as well.
Yes.
This.
Such a robotic voice.
It's such a robotic voice. What have we got?
Battle ready.
Submarines.
Oh, that's good.
and nuclear reactors.
Excellent. Oh, I can't wait till we're taking off here.
Right, what have we got that's moving out of the news that we've seen this morning? So British American tobacco flat as a pancake. So the market not celebrating their numbers and their change on guidance, but their hopeful return to growth next year. That's not being celebrated. Babcock on probably more on the defence continuation from yesterday rather than the Times giving it a mention. That's up 0.6.
Okay.
Chem Ring, after their news this morning, they are
Miners are getting cuffed.
2.7% for Chem Ring.
Right.
It's probably near the top of the pops.
That's a good move. So yeah, Antos down nearly 2, Rio's down 2, Glencore down 2, BHP. Somebody has really slammed that sector swap this morning, because if they're all moving that closely, that takes us into the commodity check from this fine morning, and you can see why. We've got, gold down 74 basis points, giving up that move from yesterday, but high-grade copper down 2.2.
That's going to be off that Chinese data.
Of course.
That'll
Well
be off the
done,
Chinese
Luke
data.
Moore.
100%. Yep.
Of course it is. Caixin manufacturing data in China coming in quite a bit weaker than expected.
Yep. The lowest since 2022, the weakest reading month on month in 8 months. So the tariffs getting felt.
Why is the likes of nickel not up on our commodity list?
Because nickel doesn't price anymore.
Because of that, because of what happened.
Because of the LME scenario, yeah. Yeah, so we don't offer that anymore.
Right, take a quick look at iron ore, how that was affected by the Caixin numbers. Yeah, you can see a drop there from 694 to 686. So that's partly why Rios and BHP are lower as well.
Still trying to find out that Tesco story. Is it still near the top of the pops? Faded a little bit. It's now just up 1%.
Quick, before we go back to that, quick look at the currencies. GBP, you are getting 135 for the dollar. $135 for the pound, and euros 114.20. For yen, you're looking at 143 against the dollar. Right, so yeah, let's go back and have a look at.
How's Europe getting on?
Tesco is now dropping back a little bit, only up 1%, however, being replaced by Reckitt Benckiser and Kingfisher. Okay, your European names.
You've got Forexpo there flying.
Yeah.
That's interesting. So we've got all of the kind of integrated miners getting smoked. Yeah, Forexpo doing well, seemingly with the Ukrainian Russian talks, perhaps.
Yeah.
Or the lack of talks, or the lack of demands being agreed upon yesterday. What a story that was yesterday.
Yeah.
Did you miss that one?
Yeah. That went.
Just went completely sour. Basically, Russia had all these demands. Ukraine said absolutely no chance, and then they stormed out after about 2 hours, apparently.
Really?
Yeah. Amazing how knocking out a third of bombers deep in Russia might do a little bit to just sour peace talks.
Okay, so that's another reason why defence stocks are strong.
Yeah.
Okay.
Correct. Yeah.
Right, European autos, those German autos are doing quite well, as is the rest of Germany. So Deutsche Telekom up 90 basis points, Lufthansa up 90 as well, and then the two big luxury Germans there at the top of the pile.
Surprised there the weakness in Rheinmetall, given the defensive slant that we're seeing. Sorry, the kind of the slant towards defensive stocks that we're seeing. Keyring, interesting story with Rheinmetall and Keyring. Rheinmetall is going to replace Keyring in the Euro stocks. So the Euro stocks 50, the premier index across
already.
Europe,
Wow.
they are going to replace Keyring. I'm not surprised to see Rheinmetall promoted. I'm surprised to see Keyring demoted. More so.
How funny is that you've got a German defence company replacing French fashion?
French luxury. Yeah, tells you what you need to know about
It is what kind of world have we stepped into?
Yeah.
Well,
So what are the Keyring brands? Do you remember those ones?
Gucci,
interesting.
Alexander McQueen, Balenciaga.
I think we did this before, didn't we? Bottega Veneta.
Bottega Veneta.
That's all of them. Yeah, but Yves Saint Laurent. So you're replacing, fancy trainers, shoes, and brooches
For German tanks.
For German tanks and missiles.
Healthy world. But does that give us a chance to buy Kering? Because, of course, with the demotion out of Eurostox, there will be some tracker selling going on. So that might be an interesting one to keep an eye on. I'm not sure what level I'd buy it, actually.
Interestingly, I remember having a conversation with a client about this when we were seeing stuff come in and out of the FTSE 100. And a lot of the rebalancing has to happen in the closing auction.
Yeah.
Because
So Scotty went through it on Friday.
Did he?
Yeah, so he's the master. He was doing it for about 20 years. And he told you, right, you put a little bit in at 3 p.m. And you get that, and then you increase it. And at 4:15, you start to go in big, and then...
Yeah, because otherwise you're going to get too much tracking error, you see. So all of these ETFs and the indices that track the underlying indexes, if you've got that stock in your basket when it's now no longer in the index, your tracking error is going to move all over the place because you're going to have Rheinmetall pushing this thing and Kering not. So you have to get out by the time that it comes in.
What really happens is that the index arbitrage funds go ahead of it. So then the auction's just massive and there's enough liquidity because the index arbs come in as sellers and the other come in as buyers, and it's usually pretty dull, isn't it?
Pretty much.
We've got DJ Meltdown. Is that you, Napster? Has Napster changed his YouTube? Because he's a bear, but he's also a DJ. So a lunch I went to last week was European. The question is, what is the best EU defence stock? And we took you through this one last week.
Defence stock is in defence ETF.
Well, no, he's saying defence stock, but I'm saying, well, why try and choose one, right? Because they've all had a big move. Here is your Wisdom Tree Defence ETF. Now, this one is what it says on the tin. So instead of a lot of these ETFs that say that they are, equality and ESG, but it's actually just Microsoft, Meta, Nvidia.
It's just another
and Apple.
S&P.
Yeah. This one is actually European defence because they've taken the weightings, and the top weightings are Rheinmetall, Leonardo, British Aerospace, and stocks that are even bigger, like your Rolls-Royce and Airbus, but have less than 70% specific sales to defence. They're actually a smaller weighting, so they're only 6% of the fund.
Got you.
So this is a true European defence. So I would say don't bother going for the single stock because you've got a lot more risk there.
I suppose it's the same thing with, picking. We don't know who the big AI winner is going to be. We don't know who the big pharma winner might be. We don't know who the big. It's sometimes better to buy diversification in that sense. You don't take so much concentration risk. You don't benefit from the concentrated upside, but you hope to not lose out from the concentrated downside. Yeah, interesting.
Right. Anything else we haven't gone through, or would you like to proceed to fast markets, sir?
The only thing I'm just kicking myself is I can't find anything to do with Tesco. So if there's anyone on the chat that knows Tesco,
Must be a
Andrew
upgrade.
In fact, Andrew McKelvey, you have alerted us to one that we've missed. MJ Gleeson. They came out with their numbers this morning. They saw their operating profit down around 15 to 20% on the expected views. So that's a shocker. Can we get their chat up? There you go.
Oi, oi, oi.
That's a shocker from them. MJ Gleeson, well flagged.
I don't know anything about this company.
They are a house building company.
Well, they better start building some houses.
Headquartered in Sheffield.
Monkey Man must know them.
They are, building low cost, what does it say here? So I've got their website up on my screen if you want to pop this up. We've got a wealth of experience in construction spanning over 100 years in both the private and public sectors, working on iconic schemes across the UK. Yeah, they're quite nice.
Go on, Monkey Man. Is that your house? Or the one to the left with all the balloons outside?
Yeah, there you go. And that's, well, interestingly, hang on a sec there, we can see that says Dublin, welcome to the Dublin, bedroom
Oh,
house.
4-bedroom house,
Which
right.
is probably why this one is therefore then green and white.
So what kind of situation are we in when you call in a housing estate Dublin?
Yeah. Anything but a slow news day today that we're zooming in to try and read
Yes.
signs on the website.
ITM Power has doubled in price in a month. Do you know that one? Tell us more.
I know that I've traded it before. I couldn't tell you much about what they do. I believe, before I Google it, hang on, I believe they're hydrogen company. Yeah, here we go. Designs, manufactures, and integrates electrolyzers based on proton exchange membrane technology. It's all found very scientific. But hydrogen power by electrolysis, used for mobility. Wow, that is some move.
They've clearly had some kind of discovery, haven't they? Let's see if there's news out from the 12th of May. And there's nothing really. Oh yeah, that's exactly what it's from. So 12th of May, they've been selected, signed an agreement with the customer who wishes to remain confidential, confirming as the supplier of 300 megawatts of electrolyzers in the Asia Pacific region.
300 megawatts, reasonably sized. Yeah. Their CEO, Dennis Schultz, saying, we're delighted to work with our customer to advance the engineering, permitting, and wider plant integration to drive this large-scale project to FID. FID.
I tell you, if you're an expert on mid-caps and you spotted that coming out, 30 pence, well, it moved before the announcement, 40 pence to 67 pence in a couple of, 3 weeks there.
Yeah, very strong. Very strong. I'd be interested to know if there's any other related hydrogen names that are kind of picking up some benefit off the back of that.
Andrew's a shareholder of Gleason's. Ugh. Sorry about that, Andrew. Okay, right, we'll have a quick 2 minutes and then we will go on to today's fast markets. So we've already got a couple of names there to look at, but very welcome to throw in another couple.
Let us know what you want us to talk about and we'll have a little look at it for you.
Right, producer Phil. The core PCE always comes out at 1:30 p.m. Producer Phil is now arguing that the core PCE is at 3 p.m. The core PCE has never been at 3 p.m. in its existence, producer Phil. If I promise you that the PCE inflation is at 1:30, and I will bet my life on it. No, you're not right, producer Phil. You're just right that Trading Economics calendar has it wrong. Oh.
I'm just looking this up now, and I'm searching core PCE, and Nick Timireas of the Wall Street Journal, who's known as the Fed Whisperer, he says the PCE price index bracket's due at 10 a.m. on Wednesday. So I think they might have moved it. The plot thickens, as they say.
I am lost for words.
.6%, it's just, let's have a look at that. And the other, sorry, come again?
We just had Rich there. I think you might have missed it.
Was he photo
He was
bombing?
walking down some stairs that I didn't realise were behind the desk over there.
So coming up on today's show, starting in exactly 1 minute time, we've got Trump's big, beautiful bill. Is it going to pass through or not? We had Vodafone up 7% yesterday, Ronnie.
Didn't see that. I was on holiday, mate. Doesn't count.
Join us.
For those of you trading the ride-hailing space, it's all about...
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Kukumba's got me. It's unfair to keep replaying the clip of Rich being wrong. He made a small mistake.
Wow. Well, like you're the Oracle of... hang on, the Oracle of Omaha.
I was going to say, why has my sister changed her name to Cucumba? Or is it my mother? Good morning, Mum. Thank you very much, Cucumba. I completely agree. Right, let's delve in. I mentioned on the show yesterday Palantir, right? And I mentioned that Barron's had run a relatively negative piece over the weekend, and Matt Arbour threw it out the water.
What did he say?
He said, well, when have Barron's ever been somebody to listen to? They've been, churning out the same rubbish for years.
Yeah, but also, I can't remember the last time I saw a Barron's article. I physically saw it, but...
Jugger's come back. To be fair, he did bet his life on it.
On what were you wrong on that clip?
What time the PCE inflation number was going to come out, right? Because for 20 years it's been 1:30 in the afternoon.
They moved it forward, didn't they?
They moved it forward once.
They moved it forward.
But this is why I do not play poker, because I would have been all in on that. Car keys, house keys, Dublin, everything.
Dublin.
And so, I would have absolutely been wiped out on that. So no poker for me. Right, Palantir, another one I wouldn't go all in on the short because it's got that magnificent momentum. But the article basically says Palantir stock has been unstoppable. Why a looming change could mean trouble. All right, so obviously we all know it's gone to the moon. Great company, great prospects, valuation insane.
Can I give you? Can I just show something, chaps? If you could pop my screen on. And this is something that we're actually going to talk about on tomorrow's episode of Talking Shop. I'm interested in how we can help people use AI. Okay. So lots of people have been talking about AI, but really, what do you actually use it for, and what does it mean? So this is Perplexity, which I know we've spoken about on this show before. Perplexity over the weekend, and the reason why I'm bringing this up and the reason why I think it's worth talking about in the pod is they've taken a real aim at Bloomberg. They've taken, there was a tweet from their CEO over the weekend saying, right, we've built this new finance tool, and on it we have XYZ, calling all Bloomberg users. What do you use the platform for? What is its USPs? Because us at $20 a month versus them at $6,000, $7,000 a year, I'd love to try and bridge the gap. So this is Palantir.
Gosh, so we're going for their TV channel and beating that, and they're going for their service.
And so when we talk about tools, this is a search engine, effectively. And it gives you all of the fundamental data. It's going to give you all of the news. And of course, yesterday there was some news, in fact, news on Friday, that they were being tapped up as a data company to start to put together a profile for the government on a kind of credit score basis, trying to centralize that. Now, Big Brother, different story. I mean,
sorry, just we'll carry on here, but just watch the FTSE. Really quick chart on what's going on here. That's it's only 20 points, but it is aggressive. So just keep an eye on that there. Either there's a news headline or somebody is in the market aggressively selling. Sorry, Luke.
Okay,
back to you.
That is interesting to keep an eye on. Now, where I think this really steps into its own is over earnings. Over earnings, this is the most interesting thing that I've seen a fintech company do in a long while. In real time, it is transcribing the earnings call and then pulling out the key insights and summarizing it in real time. There is not a company on this planet that is giving you that level of data for free than these guys.
Yeah.
And it's just incredible.
Well, I'll use that for Nike.
And you can put it in here, and then it gives you questions and queries. And then there's this option in here, right? So it is suggesting questions and queries for your next piece of research. So if they're going to pick up US government contracts, what does it mean for their revenue? And then we take a little look here. It pulls, so it's pulled 10 sources, and you can look at those sources, where it's come from, and it's giving you the answer in real time, the impact on its revenue. What is it going to do to stop volatility?
This is
And a
incredible.
summary. This is mind-blowingly incredible. It's so good.
That's your own research analyst.
It's your own research analyst. Now, the only thing is you need to know what to ask for, which is what everybody wants to know. Where do we ask? What do we ask for? And so we're going to talk about this tomorrow, how we can start to help you build prompts, how we can kind of navigate towards this. But that's just something that I think you should, to flag for the good of mankind. For retail traders trying to get access to weapons-grade information instantly, it's perfect.
Right, so this isn't just the FTSE here. This is the S&P. All futures are coming off. And again, it's not huge, right? We're only talking 20 basis points here.
I've got a headline. The Dutch right-wing leader is pulled out of government, potentially triggering a collapse of the Dutch government. Do you reckon that's done it?
It's not hitting the S&P, that.
Okay. I will keep searching. I'll keep searching.
Yeah, we will see if maybe Pete Ward back in the house today. Maybe Pete Ward can give us a bit of a steer on what's going on there as well. But let me take you through Palantir. So, Barron's argument is Palantir was added to the S&P 500 in the fall of last year. The stock had a market value of $68 billion. It joined the index on September 23rd. It's more than tripled since then. The market value just shy of $300 billion. Now, at the moment, it is grouped as a mid-cap stock.
A mid-cap stock?
A mid-cap. And it's the 25th largest in the S&P 500.
So how can it be classified as a mid-cap?
So that's exactly why they're reclassing it.
Is that going to limit the mandate of certain funds that can allocate towards it?
I think more what their argument is, it's the opposite.
Right.
So it will now rebalance its benchmark in the next month, with the changes taking place in the closing auction of June the 30th. This could trigger some big moves for the stock. A research analyst has put in a note. The pending rebalance at the end of June could make for some material changes to universe constituents and cause some substantial rotations out of the stock. It's currently weighted at 8% in the mid-cap universe. That means that for some managers have to hold 8%.
Yeah.
They want to sell the stock because they know the valuation's insane, but they can't fight against the support from the passive managers who are tracking. The passive managers have to hold. But as it moves into the large cap universe, that will activate that active managers can then get a chance to sell, and large cap managers will likely look closely at Palantir's valuation. And that could, in Barron's view, that could trigger selling in the stock.
Interesting.
I mean, as I said yesterday, I want to sell the upside on this thing because it's astronomical. You need something like 40% earnings growth per year for the next 10 years. 40% every single year for the next 10 years to stay where it is.
Do you know who one of their biggest contractors are? The NHS.
Yeah.
You go on their website, because I looked it up yesterday, because someone asked me, what the hell does Palantir do?
Yeah.
And it's got the NHS contract on it. I've got a headline here for you. Interestingly, the OECD has trimmed global outlook as the Trump trade war hits US growth. This came out at 8 o'clock, so just before the market started to sell off.
Yeah.
It has revised global growth down to 2.9% for 25-26, stating that it's all to do with the trade war. It's come from 3.3.
All right.
3.3 to 2.9.
Yeah, that's fair. It's fairly big. Interesting. That's very algo-led then. You know, as we talked about CTAs this morning, that is definitely an algo-led sell-off. I'm going to buy some here actually. I'm going to take some of those
Buy some FTSE.
£10 a point. No, S&P, because I'm so short S&P. Remember, I am... Yeah, Mango saying on the pair trade idea there, short Palantir, long Alphabet. You saw on the show yesterday, I shorted Palantir, bought Nvidia, and Nvidia had a nice, I think, 2.5% rally.
3% move yesterday. Yeah, I mean, I like the long Alphabet story anyway. I think I said this last week.
Yeah.
You know, I want to try and start to buy them in. I like the fact that they've now effectively become, you know, they've got their huge revenue engine from advertising. They've now got some really, really cool AI tools, including Google VO, the video from prompt, where they've used basically the entire of YouTube to train these videos. What's really interesting is, can they spin their edge in advertising into, you know, much more focused, selective, personalized adverts? If you can be an advertiser and you're going to pay Google, if Google can take your advert and personalize it using their AI, and, you know, you see a video of Rich popping up saying you should be looking at, you know, this for your ISA or whatnot, that'd be really, really interesting. Monkey Man, I just on that AI story, I use
just before that, sorry, Andrew McKelvey says he's buying FTSE and S&P. I am also going to buy. I was small short FTSE. I'm going to buy my FTSE here at 8755. So I am now flat FTSE, long S&P on futures, but I'm massively short on calls, like.
Hugely short calls. From where?
Hugely short calls. 6,000. Yes. No, 5,950.
Yeah.
6,000, 6,100, 6,175, and 6,350. So yeah,
bit of upside then. Just sell it. Just sell the upside. Monkey Man, I will talk about it more in tomorrow's podcast episode, on the Talking Shop episode. But I use Claude for all of my reasoning. So if I needed to build something, for example, I did some of the prep this morning for the show. I dumped it into my Claude robot, but I use Perplexity for my search and for my live kind of real-time data. But as Boise pointed out, was it the O2 are doing a free Perplexity Pro piece at the moment, which is really interesting.
What, to go and
yeah, if you're with
a
O2,
tutorial?
According to no. So if you can pay, you get a free license through O2.
Sorry, I thought you meant the O2.
Oh, no, not at the O2. No. But yeah, there you go. Sneak peek. Tune in tomorrow for the Talking Shop episode, where we're going to start to break these tools down a little bit more. And actually, you know, we all talk about AI, but how can people actively use it to help them with their trading? That's what me and Ronnie are going to be taking down tomorrow.
Or, as Monkey Man's done, written a second iteration now of his prompts.
Yeah.
And it's, you know, one of those incredibly detailed prompts that you then put in and then add the stock name.
Got it to optimize it.
Boom.
Yeah, massively. That's what I do.
But yeah, Mango, I like that. So short Palantir, long Alphabet, or short Alphabet puts, short Palantir calls is another one if you're going to go into
I suppose kind of like a semi-pairs tradey strangly type thing.
Yeah.
Interesting. There's also been a headline just out. There's been another attack on Russian assets by Ukraine. So Ukrainian strikes have cut the power to key Russian-held areas. I suspect that's within...
That would cause Ukraine. A European sell-off and take S&P with it, but then the Americans don't care, so they'll buy it back this afternoon.
Yes, here we go. Ukrainian attacks have triggered power cuts. If you want to jump my screen up, although Reuters is going to try and advertise me to death here, it looks like. Ukrainian strikes cut power to key Russian-held areas, officials are saying. I'm not going to say the name of that one. Zaporizhzhia and the Kherson regions in Ukraine's south. So, yeah, more offence by Ukraine.
Right. Okay, on that, it is 8:30, which means it's time for Angeline. She's brought us, bless her, back from Milan, these wonderful amaretti. Go on, have a try of that.
Not fair with me.
And, yeah, so very kind of her.
Lovely.
But she's back on screen with you in 3 minutes. And then don't forget, we've got Martin Harris and Aaron Bright with some
portfolioing.
You're full of it today. Brilliant. Right, so on that, we shall see you shortly. Like, subscribe.
And I will see you tomorrow for Talking Shop.
Apparently 53% of people viewing right now are not subscribed to the channel. 53%.
Give it a like. Give it a subscribe.
Where else could you hear to take a quick 10 points out of the S&P like I've just done?
While we're talking about biscuits.
I'll go and buy you a coffee now for that. Cheers, Andrew. Thank you. See you in a break.
See ya.
Bring me the next shiny new thing. Bring me the next shiny new thing.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, look, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal, and I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach, and I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There were too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, welcome to Live from the Trade Desk with myself and Matt Arva.
Morning, Ange. There you are, knocking over your pack of biscuits.
I know, right? These are the ones that Rich was talking about, the amarettis.
Yeah.
Really, really good. It'd be awesome time in Milan, but so good to be back, especially after yesterday. Very exciting. We launched crypto products.
Did you buy any crypto?
I already had.
Oh, you already had. So much crypto.
Ahead of the game.
No more coins there.
Bitcoin and Ethereum, and I said to someone that they misheard me. They said, "You have 1,000, and you have 1,000." I was like, "No, I don't have 1,000 Bitcoin. I have 1,000, not 1,000 Bitcoin." Loads of stuff. It's good to have a bit of. We were talking about this earlier. A bit of respite this week, because we got the some US data coming up. We've got jobs, of course, the big one on Friday. Broadcom, but other than that, it's
fairly quiet week. Not a lot going on. Yesterday was pretty quiet. Certainly across the FTSE barely moved. DAX had a bit of a wobble, but pretty quiet stuff. Yeah, lack of new news, lack of new impetus. I suppose everyone waiting for the next Trump bombshell. Just turning the fan away from me.
I am turning the fan because you're having this Beyonce
Yeah, I was
thing
enjoying it.
going on. You were enjoying that, were you?
Yeah.
Yeah, it is quite a quiet week, and the fact that we've got some news out from British American Tobacco. Let's just have a look at that quickly because we had quite a bit of movement there. British American Tobacco is down 0.75%. We talk a lot about sin stocks in your
Not a lot
segment.
of a move. Normally, you get tobacco earnings, you get a decent percentage move. But yeah. It's pretty much in line there. As I said, we talked about this the other day. British American Tobacco had a very good run up this year. The sin stocks.
It has, and I think this is just a cooling off of its rise. Investors not so impressed by the fact that it was. I think the sales growth target was 1 to 2%, and they were hoping for a bigger number. That's the word on the street. BAT also saying that it would return to profit growth in the US. Of course, US is not really its biggest growth market anymore for those tobacco type products.
Well, it's been emerging for a long while now.
Yeah, I can tell you that it's well and alive in places like Indonesia and.
I thought you were going to say Milan, where everyone's
people
Italians still smoke real cigarettes.
Yeah, loving their style too, and they really kind of do it with the glamour and the.
I listen to you. You've been sold by all that 80s advertising of the glamour of smoking, haven't you? You're still hung up on.
Well, it was the kind of good times, and even in Italy and Milan, they all kind of dressed the part when they're holding on to the cigarette. But I did notice a lot more people were vaping there too. So the non-tobacco products, the NTPs, which is what the British American tobaccos, the Philip Morris, all of them, trying to get in on that space. But at the same time, trying to reduce the exposure to, the tobacco products. It's proving difficult because that's where still the money is, right? The actual traditional products. Let's have a look at airlines, since I just took EasyJet, people, and it was a full flight. I mean, I think I spied one extra seat, but that was about it. EasyJet up 0.5%
The numbers
today.
from Wizz Air.
We had, yeah. Wizz Air 2025 traffic was pretty good. It's 5.7 million passengers carried. Let's have a look at Wizz. Up 0.75%. Well called, Andrew McKilvey. Let's bring up the chat because Andrew McKilvey earlier on in the chat saying he was watching Wizz Air. I was too, also watching EasyJet because they tend to go in a herd when trading.
Interesting comments from a guy who don't call it British Airways anymore, but Willie Walsh, previously of that parish, about the sustainable airline fuel, how the oil companies aren't making enough. The airlines have to use X percentage or they get fined. The oil companies have to provide X percent or they get fined, and they're just passing on the cost. The oil companies are passing on their fines straight onto the airlines in a sort of vicious circle for everyone, and no one's getting any closer to achieving the targets of having more, this airline fuel made from old cooking oil and
yes, it seems
whatever else.
It's like a cycle, isn't it?
Yeah.
It comes back and then it gets kicked into the long grass.
But as part of all the EU regulations, as your move to net zero 2050, there's a sliding scale of how much sustainable aviation fuel you have to use every year, and you're just fined against it. I think is the line, and his complaints were that no one's actually looking to achieve it. It's just driving up costs for consumers.
Is this why my EasyJet flight was more expensive than expected? Because I was paying for the pass it on to me, basically.
I think flights in general, the days of genuine cheap flights seem a long way away. Particularly if you're flying in half term, Ange, come on.
Oh, I took a red eye to try and cut costs, but it was still very expensive.
Yeah.
And I flew back red eye as well. I mean, it was quite brutal because it got delayed by 2 hours. But let's have a look at, IAG here. It's really recovered from around the April period, mid-April. To be fair, though, it has not got anywhere close to the highs seen in February, but it is marching towards that area. We're seeing a line of interest here from a technical viewpoint, just drawing that here for you because this is a very nice chart because you can see the area of interest very clearly there. And if we punch above that, then we are then going to see this price action move up towards that 359 level and past that.
Do you find when you're using your charts that you kind of have to discount that whole of mid-April period? The whole market shares the same pattern?
Not
interesting.
Really, because you find that the algos and it's all about everyone says, and why do you keep talking about this being people, human behavior?
I'm going to throw it out there. Drawing a line from any stock from mid-April, it's looking the same. There's no real technical there. That's a separate fundamental.
Oh, Axel will be very upset listening to you.
I know. Here I'm out trying to debunk Axel's whole raise on debt, but I'm just going to say it. You can't really extrapolate anything. The whole market has had that move.
But if everyone is watching, the same levels and they're programming to those same levels.
The greater fool theory.
Yes.
Okay.
Yes. Yeah.
Okay.
The sheep theory.
Yes.
Sheep theory. Let's take a look at house builders now, because we had Gleason. This is the Gleason GLEG.L. Down 21%. Let's have a look at that there. What a spectacular. Let's have that full screen for everyone.
There we go. Yeah, house builders still, again, usually tobacco stocks react on results. House builders invariably have big moves on results, don't they? It's
yeah, continually kicked in the teeth is the phrase here. Look at that. Look at how far it's fallen since November last year. But this is indicative of the whole sector, and this move.
One might say if they actually built any houses in the country, their price would go up, wouldn't they?
Some of the house builders are pushing it back, the blame back to the government, saying that if they release more brown.
Well, yes,
right?
this is true. It's not a simple thing as you can just of just being able to build, is it? It's what's available, the planning, the restrictions when you build, what you have to build.
Yeah.
It's not as if house builders can build the developments that people necessarily want to buy. Particularly in London, there's a strong obligation to provide social housing or something for the community as part of what they build.
And this comes as Barrett, Redrow as well, down 1%. Taylor Wimpey, Bellway, as I mentioned earlier. If you trade house builders or you trade airlines, it's very similar. They all move in tandem or tend to. I know what our trader friends are going to say. Oh, actually, they often say this when they see my list because I bung in my Travis Perkins and Kingfisher because I'm very much into DIY and I'm probably bankrolling B&Q, but I put that in there as well because they tend to be laggards in the sector depending on what the sector does, and if they remain weak, then these two are likely to remain weak as well. Taking a look at these figures as well, because we had those slightly positive numbers from Nationwide, but it hasn't done anything towards supporting these share prices. You see that Nationwide print?
Yeah, well, I think the overall number on UK house prices was up, but I think if you look across, it's a different story across London. I think over 60% of London saw house price falls across London boroughs, which is perhaps no surprise. It's theoretically there should be that effect with the stamp duty rules changing. Stamp duty is a barrier to moving houses, isn't it? It's that high upfront cost.
We definitely saw a surge post-COVID when they were about to raise stamp duty.
Yeah, completely. Everyone trying to beat the tax. The line, the classic, the Gordon Brown, I'm going to sell my gold on this date, and a market moves ahead of it. kind of announcement. If you know when something's going to happen and you have a definite date, like a Trump tariff, perhaps you can trade ahead of it.
Yeah. And Julian piping in as well. Hey, morning, Julian. Nationwide house prices. That was what we were just talking about. But that didn't support the overall sector very much because the mood music is still, dire for the UK house building sector. Speaking of dates, we do have a date. Thank you for reminding me.
Good Lord,
Again, another date. How many dates have we got? We've got several alarm clocks. Matt Arbour, we need to put some alarm clocks on your, for all the numerous dates that Trump has, put in place. How many 90 days have we had now? 2?
So I think we've got 3, haven't we? They're different 90-day cycles progressing in tandem.
We've got June the 4th as well. This is when Trump is set to double steel aluminium tariffs to 50% effective June 4th. This is if he doesn't do a taco.
Yeah, I think steel and aluminium, the US have been imposing strong tariffs on steel for as long as anyone can remember. So I don't think the market reacts quite as much to these metals tariffs because they're not really anything new. So are we going to see any reaction really tomorrow? I don't think so. Roll back or keep them going.
What I have been watching though is the commodities space, particularly copper, because all this does impact, for example, confidence in consumption by China and demand from China. We had the Caixin recently showing that weakness in China as well. We've got the PMI, the rest of the PMI print coming out on Thursday, but the initial reading was weakness out of China. US aluminium premiums surged by more than 50% after that announcement. Steel prices, of course, also increased ahead of time. Many reports out there, implying or suggesting that there is a lot of front loading happening ahead of that June 4th figure. Trump, of course, trying to frame this all as making America great again, protecting US industry. Do you think it's going to work?
Well, US still workers, coal miners, it's great blue collar jobs. Everyone can picture what these are jobs that are there that everyone can recognise, and I suppose it has a resonance with a certain core in your Midwest heartland, where do they in Pennsylvania, where they're steel miners are.
The Rust Belt.
Yes, in the Rust Belt. Yes, so it's kind of hard to know where Trump is going to go at the end of this. Either you have the tariffs and you're smacking tariffs across people and you're saying this is a revenue raiser. Or I don't know. He's talking himself, as I am here, into kind of non sequiturs. He's not going anywhere. No one quite knows what the end game is.
Trader friends, this sounds like a poll. James, Cam, we can put a poll out there. Is Trump's tariff going to work? Yes or no in stimulating the U.S. economy? And also,
he's looking to stimulate the U.S. economy. He's using the tariffs. He's using the tariffs as revenue raising. This is how he sees tariffs as helping pay for part of the big beautiful.
Yeah, and also, if his advisors are advising him, as I think they should, and cut that debt pile as well, right? So yeah, whether it's going to make America great again. I'd love to know. Yeah, I'd love to know all your comments, trader friends, because this is a very contentious topic, contentious subject, and I'd love to know. Put your and also give us your comments whilst you hit like and subscribe. Have you hit like and subscribe, Matt?
I don't have any.
Come on, Matt.
Social
Come on.
presence.
Crypto Moonster saying China might chicken out. Interesting there. Doesn't quite work as an acronym.
Okay.
Kumko.
I don't know what China are going to chicken out of.
This time, no tackle? You think so? Jugger?
China have stayed admirably on the sidelines and not really engaged.
Yeah,
they've not shown their hand. They just sit and wait.
And wait for Trump to come to them.
Exactly.
Here we are. Here is the only time.
that was a great one.
Yeah, and there will be another tackle.
We've got to go back on droid polls. They capture the imagination.
Yeah. They showed me a canine yesterday. It was quite shocking.
Have you not seen canine?
I've never seen canine before. I do have, I do have 2 Dalek heads in my house. Long story. Speaking of, oh my goodness me, that is hideous. On that note, one other thing that Trump has also launched, of course, is this economic initiative to boost the strategic Bitcoin reserve.
Is he back on the strategic Bitcoin reserve?
Yes, he is back on I don't think he ever left this mantra of strategic Bitcoin.
I quite enjoyed that Nigel Farage was back on a strategic Bitcoin reserve as well.
Yeah.
I don't know what strategy you do with this Bitcoin reserve. When everyone, when you run out of Bitcoins, we open up the strategic reserve. Is that what it's for? I understand why you have a strategic oil reserve.
Open up the
GPUs. Or your frozen orange juice reserve.
Or maple syrup, the Canadians have.
Exactly. There's certain things you might hold in a strategic reserve. I'm suggesting Bitcoins aren't one of them.
The Chinese, of course,
then maybe I'm naive.
Pork strategic reserve. That's true.
Do they really?
Yes.
Is it well salted?
I'm
worried what happens. Like, how long can you hold your strategic pork reserves?
Literally die if there's no pork. I mean, I think last time I checked, it was a long time ago, but I think this remains true. Trader friends, you guys know the pork belly trade is dominated by Chinese trade, right? Pork belly.
Talking of which, these things with not many markets to talk about. I watched Mountainhead last night. This film by the guy who did Succession about three tech bros or 4 tech bros covered away in. It's worth watching. It's an interesting sort of. It's from the guy who did Succession.
Film.
Yeah, just out. These tech bros, technically there's a Peter Thiel figure, a Mark Zuckerberg figure,
Let's whack this
whatever.
up.
Watching as their AI causes chaos around the world, plotting how they're going to profit from the chaos unleashed. It's quite an interesting watch.
Is it funny?
Half decent Ayn Rand joke at the start for those who like such things. And
I do. Is it like? I don't like gore though.
No. It's complete. It's like watching an episode of Succession. It's the same. It's the same kind of vibe. There we go. So
speaking of which, before Matt Arbour ruined my beautiful, graceful segue.
Back onto Bitcoin.
I was going to
strategic reserves or otherwise.
Strategic reserves. So saying Bitcoin still heading higher, 0.3% there. Still above the, it's actually turning back towards the cloud now, as you can see here. But it was, relatively well bid the last 3 sessions. Right now, up 0.3%. Of course, just showing this up because we had a very historic day yesterday here at IG. There we go. So this is our page. You can find this online. And our launch yesterday means that you can take a position on popular crypto markets. No wallet needed.
You're talking about the CFD product there. The product you're meant to be selling.
And we also are offering crypto trading to retail clients.
Coins for retail.
Here we are, and you can find this all across the media in case you missed it yesterday, right? Launches crypto trading to retail investors. Spot crypto is what we're talking about here. Speaking of which, we are now, 30 seconds to go? We have the end of our poll. Have we got a result?
There we go.
Wow. Okay, read it out, Matt.
Yeah, I'll try. Trump's tariffs going to stimulate the US economy? No, a resounding no at 61%. Only 11% on another taco.
I like how there's 7% on only time.
Only time will tell. Well, only time, 90 days. Is 90 days enough?
Yeah.
It's probably the right answer, isn't it? Because it becomes all about time and cliff edges. And why is it 90 days always?
I think the first one he meant to time it so it was the 1st of July.
Okay.
Right? So there was an easy date to remember, and he can also claim, claim that it happened on
You
that
could have tried to
day.
link
It's
it
a
to July the 4th,
holiday.
didn't he? That should have been the trick.
Yeah. So
Yeah.
it was easy. Just like how, the timing of when he announced it was also, was it a public holiday?
That's true.
Yeah, so easy to remember dates. Public holidays, so everyone could be like at the barbecue talking about it, talking it up. It's all about talking up your book, right? Peter Master saying China is currently in a fragile situation, both economically and politically. She has pissed a lot of the old guard and generals. Piss off, I suppose is what you mean. Peter Masters also saying she has not been seen in public for more than a week. Peter, please share. Are you messaging from there? We have to go to a break soon, but I'd love to get your thoughts. Do email us at us@ig.com because we do get your emails. Hit the like and subscribe button. And if you like Matt's movie suggestions, but we are going to go to a quick sting, but we'll be right back. So stay where you are.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hey, welcome to All Sessions with me, and we are off to the races, everyone. Trader friends, taking a look at my list there and zooming in for you so you can get a better view. Terra Wolf up more than 1% there. It's a pretty quiet day, it has to be said. BioNTech also up more than 2%. Riot Blockchain is up 1.3% there. NEO is an interesting one. NEO is up 1.2%. Rio had some pretty big up moves recently after its earnings, indicating strong investor confidence. On the cannabis-related side, we also have Tilray, Mara Holdings, another Bitcoin, another crypto-related one, and MicroStrategy also up 0.75%. Watching some of the miners as well because of copper, And of course, that weaker than expected Chai Sheen. Rich is back on with me, ASML on the down, the losers. Let's, yay! Where is it? Where is it? I do need a coffee. As Monkey Man knows, I need about 4 a day. Monkey Man, thank you for your kind emails that you've been messaging me about. Let's come back to my screen here, because since getting so excited about the coffee, I've somehow or another managed to click away. Okay. Yeah, I know. I have zoomed in so much. Let's have a look here.
Peter Masters saying he worked in Beijing until COVID and still got good contact with former colleagues.
Nice.
Check the makeup of China's trade delegation in 2018 compared with now.
Wow. I also have a lot of friends out there still, and because of Reuters and Bloomberg, I can concur that they say that things are still very tough out there. Lots and lots of property still showing cracks to the Chinese economy, which is why last year we saw the Chinese hit the market with that bazooka. Rich and I were talking about this on the show, and the Chinese government made all sorts of tweaks to the banking system and the mortgage market so that those people in China could remortgage when they weren't even yet at term.
Yeah.
So, yeah.
Right, so you saw the futures come off live on air. We moved down 5,920 down to 5,900. We've had a really a little bit of a recovery up to 5,908. But what are the stocks that are driving that? Well, Amex on the downside, as well as PayPal. So the two cards and payments there down 1%. Then Delta Airlines is down there, along with United.
Palantir also down 0.5%. Good short yesterday, Rich.
Well, no, because the short was at 129.70. But I bought Nvidia.
Nice.
And Nvidia jumped up. So took, I don't know, $200 on that, something like that. And then stayed short this. So this is, yeah, probably a loss of about 100 so far.
I was surprised you didn't jump in when Matt Arbo was here to kind of rub his nose in it. But
I would never do such a thing. It's a long way to go yet. And then, yeah, so Wells Fargo, United Health, not much going on, is there?
Oh,
Summarizes it.
Ford down slightly. You know, this is still a continuation of its weak investor confidence after its outlook.
But yeah, so we did see Nvidia yesterday down at 133.5. That didn't make sense. That was just the baby with the bathwater, and back up to 137 in late play yesterday, which makes a lot more sense. I think 37 is about the right price, isn't it, for now?
Yeah, and you said 131 yesterday, and I said, yeah, it's looking you know, very attractive now, I think.
Yeah, I think so, because
relative.
You know, I could understand why it was above 140 with those set of numbers. So yeah, 130 to 150 makes sense for now.
Tesla, just checking on that because I see Tesla was on your screen. It's all sessions down 0.3%. Let's just take off the cloud here for you just to make sure that it's a bit less messy, because I had that on gold and I had that on oil yesterday. But as you can see that it's broken out of that downward trend line and moving higher right now. It is still nowhere close to its highs seen 18th of December. You see there, but we have punched through that resistance that was last marked in November.
So what's the next level of importance?
The next level of interest will be the last seen January 22nd, which is 43700. Let's call it 437 there.
Well, there must be something before that.
In between that, yeah, would be 389 around there. So those are the areas of interest. It is now we're seeing higher highs and higher lows. But Tesla is still a very volatile stock, given Elon Musk is depending on any tweet, it could change in a heartbeat.
That's interesting. So Tesla, what's the move on the day? Small down, is it? Yeah, down 40 basis points. We can bring you the live news that Adam Jonas from Morgan Stanley does have a research report on it. I don't think there's anything to do here really, because it is quite a long research report. But he is overweight with a 410 target. So shall we just see if that's changed? I don't think it has. Let's see if we can get into tip ranks and analyst consensus. Adam Jonas, 410. Maintained. Yeah, so there it is. So what is he saying though? He's saying that the analyst top pick American autonomy. So he's done a research piece. You can take the screen off there. Thanks, guys. Done a research piece on US policy considerations for the AI robot era. And it's an 11-page report. And the highlight is, from the perspective of physical machines, the next 5 to 10 years with AI could bring more innovation than a century that precedes it. Prepare for the technology to develop far faster than the policies can keep up, uncovering areas of risk prior to unlocking the opportunity.
And this is why your mate from Macor and I was saying, Tesla is not, if you're a real investor, you're not investing because of the EV, you're investing because of the AI.
Absolutely.
And the future of space logistics is what you're investing for. And so, in the near term, it's going to be rocky, but if you believe in the AI and the space logistics, then this is still a long hold.
A brave new world.
Yes.
What, and just as an exercise, what do you think this could go to in the long run? Right, so there is the a longer run chart on Tesla. What do you think from this chart? If the guys are there, thank you. What do you think this can go to? That's going back as far as 2020, in which time it's gone from $21 up to an absolute peak of 488 and back down to 340 now.
Well,
I'm talking like a 5-year trade.
Yeah, I was going to ask.
5-year investment.
Yeah, I was going to ask you about duration because it's all about duration, right? I think the next 5 years it's going to be difficult. I think maybe we're going to see it potentially get up to the highs. I'm just drawing the charts here from a technical viewpoint.
Wonderful. Because I'm just wondering if there's anything there. For example, you can see some kind of, if I was going to do a very basic, me not knowing anything about technicals, I would try something like this, which gets me up to $450 by a very unexciting 2027.
Yeah, I'm just extending my line there. This is the weekly, going for the monthly.
Oh, a genius at work. Look at this, all the magic coming into Anja's screen against my very basic
or like
line.
Monkey Man says what is it? He calls it the black magic. Is it black magic that you said, Monkey Man? And then the next...
Monkey magic.
Yeah, monkey magic. The next day he said to me, he sent me a message saying, he was looking at these technicals. I was like, aha, you believe in this then? So this is just a very rough, basic thing that I would look at. And if it obeys the technicals and stays within that, what I call an upward triangle, and it hits above. So the duration really depends on what the chart is doing. You can't really, saying 5 years from now is like, the back of a fag packet, right? Or, just doing that.
Yeah.
But, if it gets to that point, and look, I'm like, this is 2029, right? And if it stays within that wedge, we could continue to edge higher.
Okay, but the long-term chart doesn't sort of say, like in NVIDIA, that it's going to double again from here. It says, yeah, okay, maybe up 50% in 5 years.
Yeah. And
I'm just
watch
wondering
this
for an
space.
option trade, you know, buying a 500 call 2 years out or something like that and selling 2 of the 700 calls.
Yeah, you could do that and then make a call to come out of it if it looks like it's going against you. But Tesla is in the next 2 years, I think it's going to be very, very volatile because, you know, there's going to be, especially in the Trump administration, there's going to be a repricing of the company. We've seen that already because it's being classed as a normal company, less of the froth and cultishness, right?
Yeah.
Many of their retail investors have hit back. First of all, not liking the fact that last year Elon Musk decided to go for numbers and instead of margins. And so therefore many people were pissed off when their brand new Teslas, even before they took delivery, got slashed by 20%. I mean, you'd be cross, right?
Yeah, definitely.
And then now there are these reports that you know, Musk is killing off its EV, some of the EV projects, and you know, pressing the easing off of the button on the truck, the Cybertruck, which is delayed, right? No one knows when that's going to come. Robo-taxi as well has been delayed multiple times.
Well, I think, but we're getting there now, aren't we?
We're getting there.
Robo-taxi?
We're getting there.
Yeah, I think so.
There's not, unless trader friends, you can tell me, I haven't seen a date for the robot, the humanoid.
Old OL1002 is saying a logarithmic chart we need.
Put a
out.
pitchfork in it. Love it, Julian. You're a technician. He's talking about this. So we do have that functionality here. Where is it? The pitchfork. I'm sure we have it here. Here we are. The Andrews pitchfork. We do have that function. I'm going to show you where it is. It's right here in the tab button on the menu bar where the pencil is, and you go down to pitchfork. Right, so how much time have we got right now?
Well, I'm going to have a quick look at what we're talking about, the end of 2027. Where in the world are we going to be then? Well, you can trade it on Tasty. So the end of 2027, I can buy a $500 call on Tesla for $100. So I would buy one of those. Then I would go down all the way to 700 and I can sell one of those for $70. So I get $200 of upside for $30. But if that's not a good enough deal for you, what can we sell on the downside to take in some of that? Well, what about a 150? Would you sell a 150 put in Tesla?
I think that's a bit risky.
Bit risky?
Yeah.
Okay, so let's... maybe move the 500 up to 550. So we save ourselves 10 there. And then we come down a little bit on the upside.
Monkey Man chiming in and saying he would do that. Let's have a look at the chat.
Yeah, right. So I'm going to sell the lowest possible put in Tesla. I'll do it in double the size. That's what I'll do. I knew there was something there. So the $100 put for the end of 2027, I can get $9, right? Which doesn't sound a lot, but it's 10% at that level. So I'm going to sell 2 of those. Where's my increasing quantity? There we go. And at this point, it's going to look kind of interesting. Yeah, there it is. Absolutely free. So, or you pay $2 for it. You buy one of the 150s, you sell one of the 700s, and then you sell 2 of the $100 puts. And that brings you to a grand total of $2. So that is your lottery ticket on Tesla. $150 of upside for $2 of a premium. But you do go long Tesla at $100 on the
Nice.
downside.
Can you go out further than 2027?
Not at this moment. There you go.
Because I was looking at my 2029. Tesla, essentially a meme stock, says James Bennett. Really about auto sales, more about the sum of all tech dreams that investors can buy into. There you go.
That is very, and remember, Nick Feingold, 60 years old today, brought us that Morgan Stanley piece, which was dreams. D, data. R, robots. Energy.
Automation? AI.
I was going for automation as well. Manufacturing and space. So DREAMS. That is, as James Bennett says, all the technology dreams that investors can possibly buy into. I think Cathy Wood tried that.
Yes.
Didn't go too well for her.
No, it didn't go too well. She really underperformed the S&P.
Do you know what? I haven't looked at that for a long time. Shall we have a look at the old Noah's Ark as well there?
Yeah. You bring that up because I was crunching some numbers recently about how her fund has underperformed the S&P the last, is it 5 years?
Is it Ark Innovation?
Yes.
Oh my goodness. There you go. There's Cathy Wood on the monthly chart. Let's go a little, give her a little bit more. Still, yeah. I mean, that is dramatic underperformance of the S&P.
Yeah, I think what happened with ARK and Cathy Wood was it did really, really well, right? More than doubling in 2020. But the problem is since then, since that 149% rise, if you go back to 2020, the fund has underperformed. You know, shares.
Always one to think about on those pukes, though, isn't it? I mean, on that day, on Monday, April the 7th, you could have picked it up, you know, reasonably if you're not a monkey man's type, getting Vodafone at 63 pence. You know, you could have picked it up at $42, and it's now at 57. So, you know, a strong 35%.
Yeah. So you're saying this is a, you know, buy the dip or buy the puke out.
This is, yeah, instead of buying like a levered NASDAQ, you could just buy ARK, couldn't you?
Yeah. But if you're going long with this and, you know, holding it, then it could be an issue if it doesn't outperform, for example, like just the S&P. And that has been the case, right, for the past 3 years.
That's it. Of all the promises she makes, of all the great interviews she gives, it's never done anything. It's never given you anything apart from hype.
Yeah. Unless you're good at, you know, you're good at spotting the swings. But yeah, look at that. I mean, this is like crazy. If you know, just put money into just look at the NASDAQ at the same time, you know, that is a name. Let's bang up the NASDAQ here. So this is the monthly that I'm showing you. I mean, you know, you see a clear.
Yeah, maybe bring it in though. To be fair to her, she's only been around since 2020. Yeah.
You know, so yeah, so she's now calling life sciences and healthcare as the biggest drags to her fund, and saying that should be the case. But yeah, this year so far still underperforming the S&P 500. So.
Yeah. But they're the biggest drags to her fund because she's chosen to buy them.
Yeah, which is
yeah. So her choices are the biggest drag to her fund.
Yeah. So she's now saying, you know, more emphasis on tech. There you go.
James Bennett again. When stocks sold off in April, it was reported that retail traders were perhaps irresponsibly buying the dip. Well, it doesn't look so irresponsible now. It looks like they were very smart. Yeah, that's the question. What do you do now?
Yeah, they were right in picking the avocado. Buy the dip.
It's make me hungry now. Time for breakfast.
On that note, we have Dylan waiting in the wings from Milan, where I've just come back from. He was meant to be on the show, but I think he missed his train. And that night, we were meant to meet for drinks at the Emilia rooftop as well. So he didn't make it for that. So it'd be good to see him. Stay where you are, because we're going to talk defense. We're going to talk about US debt and many other things. Do slam the like and subscribe button if you want to see Dylan here in London. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hey, welcome back. And we're joined by the one, the only Dylan Rattigan, all the way from Milan. Dylan, how are you?
Very good. Nice to see you. It's been a little minute here. I had missed everybody last week, so I'm very happy to see you today.
I know, right? I felt like, you had flights and then the trains got
Lots
cancelled.
of travel last week, some travel disasters last week, too many cities.
Mind you, it was on the London side. Milan transportation, I was super impressed with. So impressed.
Yeah.
Everything works.
Milan works. Milan
air
works.
conditioning was perfect. It's so easy to get everywhere. Speaking of which, June 4th, your president is going to make waves or do a taco. What is the Dylan read?
Nobody knows. I mean, the American president's number one product is the cliffhanger. So the most important thing for the American president is to create some sort of high stakes, attention seeking moment, and then make it so that no one has any idea what's going to happen until the very last moment. It's why he's one of the great entertainers and television personalities in American history, and he brings that entertainment sensibility to global politics. And so your guess is as good as mine on June 4th. I mean, I guess here's what I would say. I would not even begin to venture a guess as to what's going to happen on June 4th. But I will say that even if he goes with the aggressive tariffs because he doesn't want to be seen as a chicken, which apparently is his current motivation, is not to be viewed as a chicken. even if he goes forward with whatever that is, that likely won't last. So either he'll do nothing on June 4th, or he'll do something on June 4th that will later be, a week later, be changed.
Be rolled back, yeah.
Yeah. The most likely thing with him is always, even if he moves forward with something, is to then take it back a week later. So whatever happens on June 4th will be what happens on June 4th. But that doesn't mean it'll be the same thing on June 11th.
Yeah. And just a reminder to our trader friends who are just joining in the show right now, Trump is expected to double tariffs on imported steel and aluminium, raising them from 25% to 50% on June the 4th. This change is being made under Section 232 of the Trade Expansion Act and citing national security concerns. Trump, of course, saying this is to protect American industry. So here are the ramifications. What are the ramifications for markets? Well, we've seen uncertainty already. We've had mood music from China, suggesting that this is going to be bad for business over there. We're talking about economic growth and risks as well. JP Morgan still sticking to the 0.3% contraction in US GDP for 2025, down from a previous estimate of 1.3% growth. Do you think this is still fair, Dylan?
Do I think what is still fair?
JP Morgan expecting a 0.3% contraction in US GDP 2025.
No, I mean, I actually think the U.S. economy is stronger than people. I actually think that the reason the markets are where they, I think that number is not going to be true. To be so, my sense is that the American economy is stronger than that I would have ever thought, and that people generally think, and that we're in a sort of weird. That I think U.S. equity prices reflect that expectation, or at least what I think the U.S. equity traders would say, they're understanding their knowledge of the relative strength of the U.S. economy in the face of higher costs. I mean, even if the tariffs are not fully implemented, the cost of everything has gone up, rates are higher, et cetera, et cetera. Mm-hmm. But the overall sort of momentum in the U.S. economy still seems to be very much intact. And I think that those JP Morgan numbers are not likely to be true, actually.
And we've had loads and loads of viewers on the chat as well chiming in. We had a poll earlier about whether Trump's policies will boost economic growth. We had, can we bring that poll up, the poll results, James and Cam? Let's have a look at it. Here we are. 61% said no, 19% yes, 11% said there'll be another taco, and 7% said only time will tell. As I mentioned earlier, what is important is to take a look at what Trump represents, whether you like it or not. And I'm going to quickly show a watch list here that I built prior to Trump being 2.0 being confirmed. And here we are. We had, I think it was one of the viewers on the chat asking about whether he or she should reduce exposure to EVs. And my humble opinion is yes. And you'll see why here on my watch list. The oil is back. With Trump, it was very clear. Oil is back, drill baby drill. So you got ExxonMobil, you got Chevron there. He also really likes and has made a lot of positive mood music when it comes to Bitcoin, strategic reserves and the like. So here you also have the crypto-related names, your Mars, your Riot blockchain, your MicroStrategy. And as Dylan suggested earlier, it's all about uncertainty, whether it's geopolitics, whether it's politics, uncertainty in general. So that's why you got the Palantir, that's like a defense-related play. BAE Systems, Rheinmetall, and Hensoldt is the defense play. And Geo Group, you're asking, what is that? That's the infrastructure play because, Trump did say that he was going to look at these centers, processing centers. Dylan, is that the right term?
Yeah.
Processing,
it is.
yeah.
It is the right term.
So Geo Group's kind of like behind all that building of infrastructure. defense. Lots
I mean,
of
what's your opinion? What do you think about real movement into European defense companies?
Yeah.
You know, I'm just thinking about when I mean, I realize that that's more of a long. That's not so much of a trading setup, I guess, as it is more of a long macro position. But the combination of the distancing between the United States and Europe, combined with the escalation of the war in Russia, all seem to be, I would think, good for investment and more sort of economic activity around European-based defense names.
Yeah. I have a very firm view on that, and that is my own view. This is not trading advice, people. This is the Ange view. The European 2030 defense plan, otherwise known as Readiness 2030, means that it's not just about uncertainty, right, Dylan? We know that Europe's arms, infrastructure, systems all need upgrading, right? The UK has just announced this big defense deal yesterday. Why they're putting so much money into submarines, don't ask me. Matt Arbour earlier said it's because, you know, submarines, you can kick the can down the road, whereas if you order drones, they'll arrive tomorrow. But the whole defense plan, Readiness 2030 for Europe, for me is a long play for European defense stocks. So that's why I hold BAE Systems, that's why I hold Hensoldt, that's why I hold Rheinmetall. In Italy, you've got Finmeccanica as well. So that's my humble view. What's your thinking on this?
No, I mean, I kind of defer to you because I feel like your expertise on the names, the specific names, like you just rattled off a string of names there, is certainly superior to my own. But I just don't see how you could be against having some increased level of investment in European defense related names directly or indirectly. And I would have to think, especially with the German lead, that the most likely thing is some kind of a sort of 21st century drone army. You know, that you're going to have an extremely sophisticated robotic army in Europe, that more so than any other army in the world, I would think, because it's really, I won't say it's a fresh start, but it is the newest, freshest pile of capital targeting defense. And so whether that's materials, I think that there's high performance materials that are related to the construction of the drones, high performance technology, navigation systems, surveillance systems, camera systems, and then obviously weapon systems. I think you're in play.
Yeah, and I completely agree with you. You're totally right. And that's why I'm whacking up Red Cat Holdings for you. This is one that is super interesting to me because they build modular drones. That means that if your drones get shot out of the air, but only like one propeller or one bit of it is damaged, you can easily 3D print and lock it back on. So, you know, they're made to be fixable by troops on the ground. Also, in terms of drones, I totally agree with you that the warfare of the future would be fought this way, if not cyber attacks. So that's why I look for exposure for cybersecurity and anti-drone systems. So I speak a lot about UAS here on the show, and these are unmanned aerial options, right? UAS, unmanned aerial systems. And so the companies that do this, Dylan, are the RTXs, right? The Raytheons, the Lockheeds, the Leonardos, the Thales. You want systems that you can bolt on to what you have already to knock these drones out of the air. Andrew McKilvey also coming out with, chiming in there saying, hey, Dylan, UK defense company Avon Protection manufacturer in the US. Best of both worlds. That is a great call. Are you familiar, Dylan, with Avon? They make lots of protective gear, right? Everything from biochemical to protect you from that, all the way to what firefighters use. And so they are a great play in this space because anything that offers protection, checking systems as well, right? So airport control, anything that requires scanners, there will be a need for more of that. as walls go up around the world. And we've seen those walls going up. You fly, Dylan lives on an aeroplane, I've just realized. Just tell our viewers how many times you boarded a flight.
Brexit was, sort of, but I will say that, this is a different thing, but my preference, I used to love to go to London, and now I like it less because it's a bigger pain in the ass. Just because the airport experience is much more aggravating than it was, obviously, pre-Brexit. But that's a personal issue. For sure, all of the names that are going to receive all of this money relative to border security, defense security, infrastructure, et cetera, sort of seems to be the sweet spot. In terms of the likeliest lead sector of performance in Europe, the other thing that's nice is, and I don't know what the traders think about this, but the relative strength of the euro as the dollar has just collapsed basically over the course of the last 3 months.
Let's take a look
provides you an additional return, basically. So if you own a euro-denominated European defense contractor, you also get the benefit of an appreciating currency.
Yeah. I'm just banging up the US dollar basket here. This is the daily chart there, just to illustrate what you're saying. That's totally right. And also what we're seeing here as well is it's not just the Europeans wanting to, be ready. This is the Readiness 2030. For those of you who have not looked up the plan, you can easily Google it and find out more. But don't forget the hostilities, on the China-Asia side isn't going down either. And we're seeing, the Gaza problem not go away. So all these just point to one direction for defense stocks, right? Which is up. Yeah. And that also helps with gold. I've got some technicals on gold, so just putting that up for you. Gold, yesterday you heard me talk about this, and I've taken several legs off now, but it's still in that upward trajectory. Gold crossed that main line of support 3,300, then moved into and crossed above, punched above the area of interest, which I've highlighted in this rectangle box there. And it continues to, we've had a pullback today at 0.5%, but it's still solidly above the area of interest. So this to me still means that we could have further upside to come. Obviously, I have got a stop there and a limit as well. Dylan, gold.
I do wonder about getting short gold just because the move up is so intense. Honestly, that's the one from a trading perspective.
Yeah.
And that's just on price extreme. But it's one of the things that I was talking to Chris about on overtime last night in New York was the sort of the appeal of a short term short gold, or even some sort of a gold decline. In the immediate term, just on a price extreme. On the other hand, I don't know if you saw the silver breakout yesterday, but silver was just cuckoo bananas.
Yeah.
Interestingly, that one sort of made me more inclined to own it than to sell it. But silver's really off to the races.
It is off to the races. And silver tends to be, I'm going to take out the cloud after showing this to you. It is above that cloud, as love your technical term there. I'm going to steal it, cuckoo bananas.
Cuckoo bananas.
And silver,
look at that thing. That's straight cuckoo bananas.
That is cuckoo bananas. And the good thing about silver is it tends to be a laggard, right? It tends to lag gold slightly, and it's more volatile. Those of you that trade the space, I know there are many of you out there, it's more volatile, so make sure you got your stops and limits in place. But yeah, you're right. Silver is off to the races. And for those of you wanting some time out from gold, silver might be the one to look out for. You can see that I've got a line there, the golden line at the top at 3491. That's because that reminds me of the high back in October 2024. If we punch above this and close above this, then we could see cocoa bananas, as Dylan says.
It's cuckoo bananas.
Oh, cuckoo bananas. What is cuckoo?
I don't know what cocoa bananas even is.
That's my breakfast. What is cuckoo? And we have a cucumber on our chat as well, saying that competitors are catching up, aren't looking great on the geopolitical front with the way things are going. I wouldn't be shocked if the market dips back down to its April lows. Monkey Man, how is the UK going to pay for these new submarines? That is a good question. Anyone out there know how the UK is going to pay for these new submarines? Did you see this announcement yesterday, Dylan?
I missed it.
Starmer saying that we're going to have more submarines, but was a bit lacking in detail as to how they were going to pay for it, unless that leaked out late last night.
Don't governments pay for everything by borrowing money they don't have?
Yeah,
from the future.
Stealing from the future.
That's kind of the basic. I mean, I thought that's how it's done.
Yeah. Just like how, you know, defense, I'm going to rib Rich now. Earlier in the year, Rich was saying like, oh, you know, defense, you know, how government's going to pay for this? You know, they're not going to be able to get any money to pay for normal stuff. How are they going to pay for defense? Well, they just find a way to tax more from Joe Public. Or borrow.
All right.
All right, Dylan, thanks so much. What's the rest of your day looking like?
Well, it's pure Milanese glory over here. So we've got some sneaker meetings this afternoon, and a little rest and recovery from all the flying last week. But hopeful to see you again soon.
All right, have some gelato for me.
I will.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hello, welcome back to Trade Live with IG. You're joined with Martin Harris and myself, Aaron Bright. The portfolio management team have taken over. Finally, we've taken over the studio to do a sort of macro long-term investing segment. So before we kick off, any questions you have about long-term investing, portfolio management, put them in the chat. This is what this session's all about. We've received some questions you know, over the past few weeks from clients, from various different people. We're going to be tackling those, but if you've got any questions, we'll get those answered as well. How are you, Martin?
Yeah, good, thanks to yourself.
Yeah, good. How was the district line today?
Terrible, as usual. The only reliable thing is knowing that there's going to be a problem on the district line.
You see, I think you need to move to North London, because the northern line, I've only had a few problems with it. Usually it's the strikes, but now they're gone.
I get the strikes too.
You do. So that affects the whole line. But I haven't had any significant delays. So maybe a move up north is due.
Move up north.
So I mean, as many of you know, as we've come on here, Martin and I manage the smart portfolio products. I feel like it should come from the leader of the product, you know, a little bit about them. Martin, do you care to give us a little bit of info on the product that we manage?
Yeah, sure. So for the listeners out there who might not be aware, the smart portfolios were launched in 2017, and they're a set of multi-asset portfolios that allow investors to take a robo-advisor risk questionnaire that takes them through and determines the appropriate risk profile for them, and then allocates them into one of 5 portfolios. So those portfolios range from conservative, then we've got a moderate, then balanced, growth, and aggressive. And what we're tweaking along the lines, there's the exposure to different asset classes. So as you can imagine, in the aggressive portfolio, lots of equity. In the conservative portfolio, no equity, entirely focused on fixed income.
And that's what I enjoy about the product is we pretty much have a product for most investors, I'd say, apart from the sort of ultra risk averse who just want to keep their money in cash. Most investors will find something which they will align with their A, capacity for loss, and B, time horizon.
Exactly. So I think for the investor who wants to sit back a bit, and ensure that their product is, or their investment is always exposed to the right equities given their risk profile. I think that's what's quite key, and we'll probably chat about it later in the segment, is always having the correct exposure. So you don't want to be underinvested, and you also don't want to be overinvested depending on where you are in within your own risk appetite and your own sort of life stage.
I agree. And I mean, for both of us, it's been quite a challenging, well, I'd say certainly 2025 in terms of macro. We've got tariffs that have come in and tariff uncertainty. I mean, from my perspective, I'm seeing, you know, just so much sort of noise out there in terms of, well, are these tariffs going to be inflationary? Businesses are giving guidance, which is somewhat, sometimes a little bit concerning. I mean, we're pretty much on the same page with this. There's just so much uncertainty going on in markets, despite we're almost at all-time highs after a tremendous amount of volatility.
Yeah, there is a lot of uncertainty. In some cases, the tariffs are deflationary, and in some cases, they're inflationary, and it depends on the sector. I think, though, there was a lot of sort of noise last week. Our view currently is unchanged from, I was speaking here on Friday, from what we saw last week with the US federal court decision to stop enforcing the Emergency Economic Powers Act tariffs. And those were from Liberation Day, as well as the January tariffs that we saw.
Now, I believe it's around August, the sort of delay of tariffs is going to be around something like that.
Yeah, so look, it's unlikely, with the enforcement, it's unlikely to change the bigger picture. What we saw last week was that less than 24 hours later, US Appeals Court has allowed the tariffs to continue for now. But if needed, the administration can leverage Section 122 to impose 15% tariffs for up to 150 days. So the Trump administration has got different avenues that they can impose tariffs on. Just because there is this potential court act against them doesn't mean that the tariffs are going to go away. I think that the tariffs will eventually land exactly where they were. And, you know, Trump administration maintains an annual projection of $200 billion in tariff revenue. So our conclusion is this week, similar to last Friday, we've got ongoing uncertainty around tariffs. That's going to be a drag on foreign appetite for long-term investments into the United States.
I'd say probably just equity markets. You know, there's not this, I guess, rosy outlook if we're, you know, going to be hit with tariffs, if things are changing, if companies are going to have their supply chains affected. So a lot going on and a lot to look out for, I'd say.
Yeah, absolutely.
Before we get started on some of the questions, I know you've got a few you want to pose to me, but before we get started on those, we've got a question from Monkey Man. I think this is in reference to the risk profile questionnaire. How many questions does it ask?
It's when you start, it takes on you get a few more questions because they need to understand also your effectively your MiFID score, but it's approximately 10 questions. And that determines which portfolio you're suitable for. You can then override the system. But what's quite nice is that the system gives you the feedback with regards to where it thinks you should go and why you should go there.
Yeah, great. Now, I feel like you've got a few questions for me on our asset allocation deep dive that we got from some of our investors.
Yeah, that's right. So I think, as you mentioned in the beginning, we get questions coming through from clients, and we thought it'd be a good idea just to collate them in one space and put them on there. So very first one, and I've changed this around a bit, but how about you just walk us through the basic building blocks of a sound investment portfolio for someone who's starting out?
Well, you've covered some of the base for me, starting out a little bit with your description of the smart portfolios. But I mean, they really do differ depending on your risk appetite. That's probably the most important thing when it comes to building a sound investment portfolio. For an investor which is a risk-seeking investor, they would probably be looking at something which is going to, and they've got a lot of time on their side. They'll be looking at something which is fundamentally in a large amount of equities. And as you sort of go down the spectrum, you will get the least risk averse, the most risk averse investor who really doesn't like risk. They will probably only be in a bank account. And as you work your way up, you get a little bit of fixed income exposure, then a bit of a blend of equity and fixed income, then a bit more equity, and then onto 100% equity. So it's a difficult question. A really good question from one of our investors there. But there's no one size fits all answer. It depends on two things: how comfortable you are with risk, which is really important, and your capacity for loss, and also your time horizon, really, because that's all sort of interlinked. Your capacity for loss and your time horizon, which is how long you can invest for and when you need that money.
All right, so that kind of tees us up for perfect follow-on question, which is about the 60-40 portfolio.
Yeah.
Is that then the perfect portfolio for everyone? How does that fit?
So the 60-40 portfolio is the classic investment portfolio. I'd say probably from the 40s or 50s, 60s, it sort of came to prominence. And it's, I think the title gives it away, but it is 60-40, but in equities and bonds. And the idea is that you've got a little bit more in your growth asset. Bonds, some of them can be growth orientated, but they're mainly used as sort of risk dampeners. They're not as correlated to equities. They're not perfectly correlated to equities. They tend to particularly the sovereigns do well when equities sell off. Is it still relevant in today's market? Well, I've had this discussion for a while with where I previously worked, and I mean, you see it asked a lot on LinkedIn. Yes and no. I mean, the biggest issue we had coming into the 2020s was that both equities and bonds had a huge bull market, and yields were ultra low, equities were all-time high, and people were saying, well, where's the growth? So you do have people looking at gold, which has done well, so to add to that segment, and other asset classes, real estate, private credit, private equity. People are saying, I think Larry Fink came up recently and said, it's going to be maybe 50, 30, 10, or there's going to be a little bit of tweaking to it. Is it still relevant? I think so, but there is also opportunities for adding alternatives to your portfolio. I mean, we've done that well. Our portfolios aren't just vanilla equity bond. We've got gold in our portfolios. We've got real estate through a fund of REITs. And we've also got a diversified commodity swap in some of our portfolios.
That's right. So I think, pretty what you were talking about, though, with regards to the 60-40 portfolio, traditionally, the bonds were meant to act as that diversifier. Yeah. They were uncorrelated to equities. And what we had seen, particularly years like 2022, significant correlations between bonds and equities.
Which means you just get basically a double sell-off, which is the whole point of having a portfolio is this one goes down, well, this one lifts me up. But when you have both selling off, it can be quite upsetting for an investor.
Exactly. So I think that's one of the things that takes us on to the point around where should you actually have that asset allocation. And as you mentioned with the aggressive portfolio, heavily focused on equities, you've got 90% equity exposure. And over the last 10 years, really since 2010, equities have just significantly outperformed bonds. Bonds have not been a great investment vehicle. We're hoping now that times are changing and that bonds...
We've got a reset in the yield. I mean, we've got yields sort of above 4%, which we hadn't seen pre-08, I'd say. Moving on to that was a really interesting topic, one of my favourite topics in portfolio management, asset allocation. We've got a question from Julian here. Who chooses the funds in each group? Well, that's us, I believe.
Yeah, so Julian, I think one of the tools that we use is we have a partnership with BlackRock, and BlackRock and IG work together to determine an asset allocation. And effectively, we're able to utilize all of BlackRock's insights to put forward these portfolios. So really in a partnership, they're designed by BlackRock, and we manage the rest of the portfolio.
Exactly. And so we have, as we said, lots of different multi-asset portfolios, which we utilize BlackRock's really, really strong asset allocation research to basically build really robust long-term portfolios, really institutional quality, I'd say, which retail clients get access to.
Yeah, I think that was the real selling point, was that without having to go through a financial intermediary, you were given access to a multi-asset portfolio from BlackRock, and IG were one of the first to do that.
Yeah, I mean, a question really here that I think we can both tackle now, and this, I mean, you've probably experienced this more than I have in markets, been in the industry longer than I have. How do you stay disciplined during market downturns when everything feels scary? Because we all remember the first time that markets sell off, and that, we're either managing a portfolio or we've got money invested, and it can be scary. So how do you stay so zen?
How do you stay zen? I can't tell you how to stay zen, but I think this goes back to that initial conversation we had, which is being in the right risk level. And depending on your stage, often it's how much time you've got available to you in the market, as well as what your risk tolerance looks like. Realistically, if you are, the younger you are and the higher your risk appetite, the more you should be exposed to things like equities. Yeah. And we saw large sell-off in April. A lot of investors choosing to close out of their portfolios, market bottoms out, and then there's a recovery. And if you've sold out, you miss it.
Yeah.
So really, if you try and take the emotional side away from things, and you try and approach it with some structure, that you will continue to invest. And one of the favorite things that in the wealth industry is to do dollar cost or pound cost averaging, and just ensure that you are putting in a bit of money every month. And what that means is that you're often able to smooth over some of the large drawdowns. You also do miss out on some of the big jumps in the market, because you're smoothing out your average over time. But that's one of the ways that you can stay disciplined and avoid panicking.
Agreed. I'll add to that. From a portfolio manager's perspective, I mean, we are human, as far as I'm aware. It can look, when you see markets sell off, it can be quite scary. I mean, even when we were watching Liberation Day together, it wasn't pleasant to see markets down sort of 10-15% that year, from the beginning of the year. But you have to sort of realize that if we look at things historically speaking, don't do anything knee-jerk, assess the environment and make sensible, calculated decisions. So, if we did something knee-jerk, we could have sold a tremendous amount of our equities in our portfolio because we wanted to stop the pain. And as you sort of alluded to, that would have been a really poor decision, because look how much equities have rallied. I think it's about 16% since the trough of Liberation Day. So we would have really done our investors very poorly if we'd basically taken this knee-jerk and hadn't put on our analytical hats and thought, be sensible, this is quite painful for our investors, but we do believe that over the long term, this should sort itself out, and we're not going to do anything reactionary without without sort of researching things properly.
Yeah.
Another thing which is popular that our clients tend to ask is tax wrappers. So, and I know, I'm obviously from a wealth management background, so I've got a little bit of experience in financial advisory firms. So, yeah, tax wrappers, in my opinion, is something that investors often overlook, because the tax considerations can be huge. I mean, do you have any experience of that, in here and also or in South Africa as well?
I think it's one that I'll pose back to you. I think one of the things though is that our investors are probably not using their ISA enough, and I think many clients come to us, and there's actually a misunderstanding of ISAs, and I think a lot of people look at an ISA as a cash savings product instead of also understanding the stocks and shares element of it. And if you were to consider just how much tax savings you would have when you are investing in stocks and shares over a long period of time, and if you consider historical trends in something like the S&P 500 versus earning a rate of, now you can probably get about just under 4% in a cash ISA.
Yeah.
You extrapolate that over a 20-year period, you would have wanted to be in the stocks and shares in an equity portfolio.
We did some analysis, I think it was last year, and we looked at sort of the returns on some UK stocks in a tax wrapper. I mean, we did some basic assumptions on the tax rate, but the return differential compared to if you'd held it in a non-tax wrapper, if you just hold it in a trading account, or if you held it in an ISA where there's no tax, was massive. And people often forget that, the tax liability can be really damaging to your long-term gain. So it's something to really keep an eye on.
Yeah, exactly. And so to optimize the tax benefit, you can put your most aggressive funds in it. So I think that has been the view that I think not all of our clients have used, and they, if you can potentially utilize other avenues for just earning interest if you're looking at a savings product, and stocks and shares into the ISA is the way I prefer to see it being done.
No, it's a brilliant tool and something that our investors should certainly utilize if they can do so on our platform. That brings us to time, Martin. It's been a really fun segment. Thank you very much for your questions today, and we look forward to doing another segment like this soon. Take care.